We use this information to guide the programs and resources we provide for this global community of entrepreneurs. The first poll, how are you feeling about your business right now? Are you optimistic? Let us know in that poll. Also, if there's specific topics or challenges you'd like us to create resources for, feel free to share them in the chat. Just a couple of quick housekeeping item notes before we get started. First, let us know where you're dialing in from in the chat. See if you have a neighbor. Secondly, we're going to have live Q&A near the end of our session, so feel free to submit those questions for us at any time using the Q&A function at the bottom of your screen. We'll do our best to get to as many answers as we can. Now, while you're answering those polls and I'm checking out where you're coming from, I'd like to take a moment and recognize the incredible support of our corporate partners. The work we do at the center wouldn't be possible without all the generosity and belief of our partners and funders, including Nasdaq, Wells Fargo, JP Morgan Chase, KPMG, Walmart, the Asia Innovation Hub, Wilson Sonsini, the Nurit Foundation, and BPM. We're deeply grateful for their partnership and hope you'll join us in sharing that appreciation too. All right, so some polls came through. Love that. Also San Diego, Cyprus, Los Angeles, Fort Lauderdale. Welcome everyone. Quincy, all right. Maryland, Oakland. Love to see it. Welcome everyone. We'll get started in just a moment. Ooh, Bangalore, India. Welcome everyone. SF Bay Area. All right. Well, with that behind us, without any further delay, please join me in giving a warm welcome to our first special guest for the Global Market Update. Dan Angius is a managing director at Nasdaq. Welcome, Dan.
Hello, everyone.
Looking forward to having you on this. And over to you.
Great. Thank you, Colin, and thank you for the NASDAQ Entrepreneurial Center for hosting this webinar. Very happy and honored to participate. Uh, by way of background, I am a senior managing director at NASDAQ in our new listings and capital markets team. What that means is that I engage with private companies in the lead up to them looking to go public on either NASDAQ or the New York Stock Exchange, and then bring all of the information to them to help them make a good decision as to where to list. If they make a great decision to list on NASDAQ, we are both thrilled, and I transition from that first role into a project management role in helping them deal with the regulatory, governance, investor relations, and marketing challenges and opportunities that come with an IPO. And so a lot of the discussion that we're going to have today, are the types of discussions that I have frequently with companies across all sectors and geographies. Although I am primarily geographically oriented with focus in California, Arizona, Utah, and other states, we've actually seen, even though companies might be ostensibly domiciled, let's say in California, they actually have an international, operational headquarters elsewhere. And so I think that is a great case study, which we'll bring into the discussion a little bit later. But when you think about the state of the markets and what is actually happening now, the challenge that I had in preparing for this is that, well, the notes that I made a week ago are no longer relevant. Um, that maybe I'll take that too far. That I'm sure that there's still some kernels of truth, but things are moving very quickly, as I'm sure a lot of you have seen. And so from the chat, I noticed that there is a good amount of domestic US-based individuals. So we're going to target both an update on the domestic economy as well as the international markets, just to give a full flavor for everyone, no matter where they sit. So focusing first on the international side, I think the biggest item that we have yet to really understand how it's going to factor into the overarching market is Trump's recent fees associated with the H-1B visa. This is something that one camp of economists think could be a beneficial event. Another camp thinks that it is not. I am not here to proffer an opinion, but rather just show the data on both sides. Number one, it represents an opportunity for internationally based entrepreneurs who are interested in either redomiciling to the US or to set up operations, in the US with a headquarters elsewhere. And what I mean by that is talent is going to be expensive even before this program. And so if there is a way, though, to, let's say, hire domestically as opposed to relying on H-1B, if you were to, let's say, set up bases of operations in the US, I believe that that will be easier in light of recent developments and could represent an opportunity for companies to grow at a further scale. If there is a desire to, say, transplant international workforce to the US, that becomes a more costly endeavor. And ultimately, it is your investors. I mean, yes, the company has to pay the bill, but depending on where you are in your growth cycle, your investors are likely going to be the one footing the bill. And so that creates another dynamic in terms of how you go out for funding. If you are likely heavily reliant on H-1B, that's going to, I wouldn't say put or give investors pause, but venture capitalists, um, yeah, but I mean, but venture capitalists are not going to, they are going to factor that in to their arithmetic. And so it's just something to keep in mind. Um, the other components that I thought was worth mentioning is tariffs. Again, going back to that dichotomy of, companies that are looking to either set up a base of operations in the US and operate out of the US, uh, doing so and creating jobs can certainly represent an opportunity for the business. Doing so internationally opens it up to certain tariff potential volatility. Um, the other area that I thought was uh, a relative problem for companies looking to move ahead with U.S. operations, whether internationally or domestically based, is the frequently changing environment for regulations and other rules governing business conduct. Like there's a lot of change happening right now, and I don't think that that change is going to abate. So that will present a headwind for companies looking to move domestically. The other item that I thought was actually an opportunity for companies to consider is that we found funding. This is sector specific, but venture capital funding has generally moved or been showing a trend line to moving beyond, let's say, Northern California. Not only have there been a greater diversity of states that investors are moving into, but we've also seen European deals come to the fore more frequently. Of course, this funding doesn't necessarily extend to China for geopolitical and other reasons, but we have found that there, compared to, let's say, 2018 and before, a higher degree of funding cross-border and internationally. So with that in mind, I think that with the high end of those topics being the most recent ideas and topics of consideration, one of the items that I also wanted to discuss is why this matters. As we discussed, global growth opportunities are shifting quickly. What strategy you have today will certainly need to be adaptable for tomorrow. There is also going to be a premium paid for flat organizations. Most early stage companies are generally flat in nature, but there is a tendency for organizational creep as the company scales. Having a flexible and adaptable management and leadership team that can execute on strategy changes quickly as we head into the next 4 years, possibly 8, this is going to pay premium dividends for businesses that are able to move quickly. Founders do need clarity on where to expand, when, and how, but the challenge there is that there isn't necessarily a source of truth that helps us understand which direction founders should move in. So where does that lead us? Well, although life of a founder is already hard enough, one of the things that we would encourage is founders to develop not only a corporate board of directors, but an ad hoc board of advisors that they check in frequently that represent a diverse array of opinions and specialties. You're going to need to understand, no matter what sector you're in, a number of different angles in which to interpret the current market environment and where you should go. The only way to responsibly do that is to find trusted voices that represent very large cross sections of both the domestic and international economies that can help you understand how the various variables interplay with each other and what that would mean for your business. Overarchingly, though, it does feel much like how the poll earlier on had indicated that there's a sense of optimism coming into at least the domestic, if not the global economy. From an IPO standpoint, we have eclipsed last year's high watermark of IPOs. We are somewhere in the vein of 175 versus an average of 125 to 150. These cut across many different sectors. Biotechnology, pharma are not represented. They have been in a deep, I guess you could call it, sector recession for some time, and we don't necessarily know when that will abate, but we hope soon. The amount of capital raised has been healthy, even in the face of tariffs. Like just this past 2 weeks, we've actually on Nasdaq alone raised over $5 billion in proceeds across 6 different companies. This is quite meaningful in the sense that if you were to talk to us in July of the year, we wouldn't anticipate a heavy September or October calendar, much less that amount of capital raised. So overall, we are in a state of optimism, which we hope extends to companies across the globe, but definitely represents an opportunity for companies to redomicile and move into states. And so one of the items that I also wanted to touch on is the funding climate. There's a number of different factors involved here, and I guess you could put them into 3 buckets. One is the AI or AI tangential funding trends. Second is, let's say, general sector. And then third is healthcare, including pharma, digital healthcare, and general healthcare services. Starting with the AI, I don't think we need to belabor this point, but so much of our current funding capital is going to that source. It's not surprising to anyone. One thing that I would recommend for founders that can pivot and or at least attach themselves to it are tangential industries that support AI and data centers. Again, not brain surgery, something that you likely all have considered, but I would like to bring up Legions as a good case study. So Legions is a company based in Northern California in San Jose, has a very large presence domestically and a good amount globally. And what they do is they actually create and manufacture various components and systems for data centers to make them more energy efficient. Now, originally, their company was meant to be a sustainability play to allow all businesses to be more sustainable, smaller carbon footprint, a number of different KPIs. But what they found, and their private equity sponsor found as well, is that with the AI boom, there would be an ability to not only pivot into the area of making data centers and AI more sustainable, but they could actually initiate an M&A strategy that would help them expand inorganically to take on other companies that could support that effort. I know that it's wishful thinking to think that many of the companies on this call have millions to billions of dollars to deploy for M&A. That's really not my emphasis. What I'm actually more focused on is Legence ability to pivot and pivot quickly, even though it's a large organization. They made this pivot and they rebranded, generally speaking, I think it was a year to a year and a half ago, and they went public 2 weeks ago. And so again, going back to the premium that I mentioned earlier of companies that are able to pivot and to move quickly to new circumstances in the market, Legence is a great case study in how you do that, even as a large organization, that will ultimately help the business. So that's in the AI side. If you have an opportunity to shift, pivot, or at least make some of your business plan AI tangential, that will help. But it has to be authentic, it has to be credible. The second is, like we had mentioned, general sector. These are sectors ranging from software to internet to consumer goods to manufacturing. We have seen an interesting diversity in the number of IPOs that have been happening across all sectors. It's actually evenly distributed at this moment in time, with the exception of healthcare. What's also interesting is that the funding, if you take out AI-centered funding, you're actually seeing less software investment. I think that investors are generally trying to understand which companies in the software space will be eaten by AI and which ones will be able to stand alone. But with that, fintech, internet, consumer, these have actually been some of the winners for recent fundings. And so that is also just something to keep in mind as a trend that we've seen developing. The third area is biotech, or rather I should say healthcare. If we focus on pharma and biotech as a funding source, domestically it is not a good place to be currently. There hasn't been meaningful funding rounds as there has been in the past. There have not been any IPOs of note that can bring other and pull forward other deals. M&A activity has been dormant. Why is this? Well, regulatory environment is not helpful. We don't necessarily know, Health and Human Services, how that's going to factor in to various operations of biopharma. But it also represents an interesting corollary in the sense that international biotech and healthcare actually is a really, to wait out the storm, so to speak, it's actually a very interesting place to be. And so a good case study of this is, I can't name the company, but we recently engaged with a scaled private biotech that is over 15 years old. I only mention that because it's not necessarily just a fly-by-night operation. And they had been approached by the UAE to set up a base of operations in the UAE. This company is originally based in Utah. And the UAE said, if you do so, and you hit these certain metrics of job creation, et cetera, certain KPIs, which from the company's perspective was very manageable and not too aggressive, they would actually accelerate the review of their therapeutics from, let's say, a normal 2-year cycle to less than a year. And they would also subsidize those therapeutic trials. And so the interesting thing from their point of view, when they were doing the calculus as to whether or not they should move forward with this type of approach, well, the fact was is that they could use the data that they extrapolated from the UAE with certain circumstances, some data they might not be able to, but they could use that as precedent to move when the time was right, use that as fuel for domestic approvals and or trials. So in other words, they were playing sector or geographic arbitrage and setting up a lower cost environment and a more expeditious environment to run their trials that they could ultimately port over to the United States with things better. As to when healthcare is going to do better, there is a definite thought process that interest rates they factor in more heavily with with biotechs in the sense that whenever a biotech eventually becomes commercial, the more that interest rates go down, the future payoff increases exponentially. That should help. But I also think that digital health is similar to fintech. It's also making inroads and being progressively, it's doing better as you saw from either Hinge Health or Omada, two recent IPOs that did quite well. And so maybe the digital health environment will be better, which we hope that it will. When you think about regionally, North America versus global business, I would point companies to think about Israeli cybersecurity. Most companies don't really think I was going to go in that direction, but I think it offers a really interesting place. And this goes beyond cybersecurity, but we often find it quite a bit in cybersecurity and other software. But an interesting way to run one's business that, if you remember from the beginning of the market update, there are certain opportunities and weaknesses that you would be exposed to depending on where you set up. I believe, and we believe that this Israeli model, so to speak, has been most beneficial in creating the most favorable domestic climate for their businesses, even though they say that their headquarters is in the United States, but their operations are primarily in Israel. So let me just unpack this really quickly. So we find with certain software and cybersecurity companies that they are founded in Tel Aviv, then they redomicile to the US. But in addition to that, it's paired with a concerted effort, no matter at what stage they are, to invest in the region and to go on a hiring spree. This typically follows a very large funding round where they have a lot of capital to deploy to costly engineers domestically. Well, this process, even if you were to have Israeli management move to the States, the immigration process will likely be easier just by virtue of why they're moving, which is to create and sustain a higher number of domestic jobs. And so from that, once the majority of the revenue starts being localized domestically, that actually makes things easier for the business to continue to operate and take advantage of the benefits of being a US headquartered company, but still having significant operations in Israel and elsewhere. Certain companies that have adopted this that have been very successful, SentinelOne comes to mind. WalkMe, before they were acquired, also comes to mind. So if you're looking for a good, operational process, generally speaking, that is a good place to begin. Overall, like if you just take a general look regionally, the U.S. still deep, but it's highly competitive. I think that there's a benefit for having proof of concept done internationally. Like if you think about fintech, assuming that regulations, cross-border regulations, are not an issue, just going through a thought experiment, you can test out various products and determine product market fit relatively easily if you're an international company but selling into the US. I think that once the company makes the decision to move to the US, that type of product head start will be very helpful in helping navigate a very competitive environment. Europe also, it's a little uncertain as to, depending on which sector you're in, but it does represent some opportunities depending on where they are. Asia remains the fastest digital adoption rate countries. This also goes beyond into other sectors which have been very appealing as late. For example, crypto. Um, the crypto, both from a retail as well as infrastructure play, um, it's been something that has been very helpful to begin elsewhere. So you take a look at like a company like Circle, for example. While they have had a high amount of stablecoin issuance and adoption in the US, certainly, they were actually emphasizing earlier on in its early to the mid part of their company's maturation cycle, international use cases, that they tested various products and or situations that would help indicate whether or not growth would be sustainable internationally as well as domestically. So there is that component that no matter where you're based, actually using the market engagement that you have internationally is going to ultimately help you from a domestic standpoint when it comes to crypto from a retail standpoint. And I believe that would be the same from infrastructure, although there are regulations that might impede some elements of that. Africa remains a land of huge opportunity, but yet very little maturation so far. Fintech and mobile first solutions remain the primary go-tos. So when you're considering which market to enter into first, I would first think, regulatorily speaking, which gives you the most certainty. Is the market that you're looking to move into, have you been able to develop at least a thesis around product market fit backed by data that you've experienced in your home country? Or, which sector are you actually going to be focused on? Even though you might start in internet, could you move into AI tangential support or any other popular and meaningful industries? So I know that I'm coming up to time here. Colin, would it make sense to potentially, um, is there anything that I should maybe, answer or questions or so forth?
Yeah, there's a couple questions, but I think we can leave them for the end for the Q&A. So thank you, Dan, for that overview. Great insights, and I love your optimism in that global market. So up next, we have our panel on the helping everyone understand expanding your business into international markets. So, on this panel, we have back from our market update, Dan Angius, the managing director at Nasdaq. We have Bobby Napiltonia, founder and chief helper at the go-to-market firm. We have Shivani Sopory, partner at KPMG and board member at the Nasdaq Entrepreneurial Center. And joining us also is Ken Siegel, executive advisor at Wilson Sonsini. Bobby, team, welcome to the panel. Bobby, over to you. Thanks, everyone.
Well, thank you so much for having me, Colin. It's a pleasure doing the work. I think I was looking, it's about a decade now that we've been working together, and this may be one of the more exciting programs for me to participate in. In coming to America, as we just heard from Dan, the world has changed significantly. I'm Bobby Napiltonia. I'm with the Get the Money firm, and we say that because it's not about going to market anymore. It's about understanding your markets, how you're going to get the money out of them. And if we've never been at a better time, the internet has made the world flat. COVID made it so that we can have decentralized work. And all of you are looking, where am I going to go and how am I going to grow? It's about coming to America. Today's panelists are going to be the experts that can help guide you because it truly is a decision that you should make, calculated, as we heard, with your board. Will they invest in it? Do you have the support? Do you have your ICPs and do you have that traction? So with that, I'm going to ask my esteemed board panelists to go ahead and introduce themselves. And I'll wrap up that as a startup junkie, I'm so excited. Hit me up on LinkedIn. Let's connect and take it away. Ken.
Thank you, Bobby. So my name is Ken Siegel. As Bobby said, I'm an executive advisor at Wilson Sonsini. So for those of you who don't know, Wilson Sonsini is a large law firm with a technology focus. The firm's been around actually since the late 70s, mid 70s in Silicon Valley. had a technology focus and has continued to maintain that focus through the years, and now has expanded to a significant footprint in the US as well as overseas. I started my career at Wilson Sonsini as an attorney. Then I left to become a general counsel at one of my clients. I was a GC of a number of different tech companies before returning to Wilson Sonsini about 6 years ago now as an executive advisor. And what I do now is, thankfully, I'm not practicing law anymore, so no timesheets. I work with entrepreneurs, executives. A lot of them are general counsel. Some of them are CFOs, CEOs. And I really talk with them and help them with any kind of practical and operational matter. So it can be things like, how do you think about building a budget for a legal team, or how do you design a team, or we're expanding into a new market. How do I think about that from a legal coverage standpoint, or some of the legal issues that I should be thinking about? And so I'll talk about the practical and operational side of that, and then happily hand it off to the attorneys when a legal question comes up. I am still an attorney. There's still an attorney-client privilege that attaches when the conversations drift into that space, but I quickly extricate myself and point people in the right direction.
It's a bigger bailiwick than most people think, isn't it, going international from
It's
a
a
legal
huge,
perspective?
yeah, it's way more complicated, and it, quite frankly, is incredibly fun.
Yes, it is. Thank you so much. That was very good. It's hard to believe since the 70s. I can't imagine what all they've seen come through those doors. It's great, great, great introduction. Well, Shivani, nice to see you here today. Tell us a little bit about yourself and what success exiting this call looks like for you.
Great. Thanks, Bobby. Hi, everyone. My name is Shivani Sopory. I'm a partner at KPMG. KPMG is a large accounting firm. We also do advisory and tax for companies. I specifically work in our emerging growth practice, which means I work with all of our clients that are high growth, early to late stage startups, usually from their first audit all the way through to their exit, whether that be an M&A or an IPO. So I do really enjoy seeing that high growth phase a lot of the times where companies are looking to expand globally. And to be honest, in today's environment, you could be a one-year-old company and already global, just the way Bobby, you were talking about, the world is a bit flat now. So really helping companies like look around corners, stay ahead of risks, and just think through what you need to do to stay abreast of any regulatory issues as you continue to expand your business. As Colin also mentioned, I've been a member of the board for the Nasdaq Entrepreneurial Center for a number of years now, and KPMG is a proud sponsor of the organization. So I'm happy to answer any questions that any entrepreneurs may have. Feel free to ping me on LinkedIn as well.
Outstanding. Well, we couldn't do this without some great resources that you provide, and probably more of a macro understanding of what happens locally in a lot of these markets, because you have presence just about everywhere in the world, don't you? How many countries are you in?
Practically everyone.
All right. So we all know who to call when we're really looking for that. And then our last guest, the good news is we already know who Dan is. So we're going to jump right into some questions and fire it away here. Dan, I got a real question for you. So the Nasdaq's worked with companies on a global basis. What do you see as being the biggest drivers for founders that want to go beyond their home markets? We're going to start home markets, and then we're going to go coming to America.
Generally, the funding environment is a really good place to start, as I'm sure, Bobby, you're very intimately aware. If there's a way of moving beyond an international market and engage with, let's say, domestic or US-based investors with some element of proof of concept or data that can support, a seed or an A. I mean, it sounds very basic, but it's amazing that there are a lot of companies that receive funding internationally and try to make the jump. It's having a beachhead from an advisor and capital standpoint, because obviously, as you can tell everyone, one funding round begets another.
Right.
And so it's all a network effect. So my recommendation, the successful IPOs and growth stage companies that we've seen from international to domestic markets, they have found that patron investor who is deeply connected and then is able to offer additional connections, assuming there's data backing up product work.
I love where you're going with this, because as a founder or leader, you truly have to understand. I always talk about the sequencing of your customers is as important as choosing your investors. And one of the Q&As that we popped in is, and this might be some research that Nasdaq has, is a underrepresented group have a better chance of getting funding internationally versus coming and getting it out of America? And maybe that's something we wrap up and start pointing to some things, because it looks like there's a lot of assets the Nasdaq has. I see some questions on tariffs that we can point them to afterwards, Dan.
You bet. I'm happy to talk about it whenever.
Good deal. So, Shivani, as you heard what Dan said and that folks looking for it, I'm curious, what are the first 2 to 3 signals that a founder should look for to know that they're ready to expand internationally? Is it that people are coming to their website? Is it that their downloads? Is it that, because they have to be able to transact in those countries, I presume, right?
Yeah, I mean, I think a few things. I think the first is, do you have a predictable, steady growth in your home country? So if you're based in the US, do you actually see some traction here? Now, if you don't, but you are seeing a lot of attention globally, that's also another indication that maybe you should actually start globally and then move to the US. Sometimes there's less competition outside the US, but it does typically take a little bit more infrastructure and operational support to support sales and infrastructure overseas. So before actually diving into it, thinking about what some of those implications will be, and if you're picking your countries in the right and smart way. So just because you're getting some attention from one country, is that really the one that you see your product expanding to, or you see the regulatory environment positive for your business in that location? So definitely thinking through those types of risks as you're looking internationally. But if you are getting a lot of like inbound requests from other countries, it's usually from customers in other countries, it's usually a good indicator that you should start looking outside your current area as well. Like I said, I think the steady growth within your current market is also something that's quite helpful. I would also tend to look at where you might have good like reseller or other sales avenues that you may not need to direct yourself, but you can lean on outside resources to help with to enter a market, because that would also pull the pressure off of your own entity before you start expanding internationally. I think the other thing to also look at is where your opportunities outweigh being in the domestic space. So if you're not looking at customers, you might be looking at headcount, resources to support your business. Those are all reasons to also think about going international. A lot of those cases, you could get better support in a specific area or a specific area of expertise for possibly a lower cost in a different jurisdiction. And so thinking through if one of those setups is more appropriate for your business in the long run.
Wow, I love that. There was a lot to unpack there, and I pulled 3 things out that I'd like to underscore for the audience. The first is, I believe, the most important, personally and professionally and through experientially. First-time founders love products and build them because they're builders. Second-time founders build for distribution. You touched on that. There are ways in which you choose your right hyperscaler partners. You may never need to enter a country to transact in those countries. Is that a good way of looking at it? So if I truly had a strategy for distribution, I could look at that. I also think then the next key would be the jurisdictions and the regulatory landscape. Let's take a look at a company like Vanta in America that scaled infinitely because they looked at what was happening in Europe around GDPR and some of those things. On that note, we're going to jump to Ken, because this is a 2-part question for you. Speaking of jurisdiction and regulatory, that sounds very legalish. On that note, so if I think about this from a legal perspective, and I want to come to America, is America one city, one state, one jurisdiction? How should I see smile? How should I look at America? And then I'd like to hear from you. What are the most common mistakes founders make when thinking about this and then executing against it?
So I think I can actually expand this and make it a little bit rounder. So I would say that Americans looking overseas tend to homogenize the world, and overseas people looking at America tend to homogenize America, and both of those are the same mistake. When I'm talking to people who are talking about coming inbound into the US, so overseas people looking at the US, I have to remind them that we have 50 states plus the District of Columbia, which we can kind of set aside, but we have federal law on top of that. So think about you're entering into a market with potentially 51 bodies of law that may be governing your activity. Obviously, in the US, there are some areas where the federal government and the federal law preempts state law, so you get some consistency across the states. But there are a lot of areas where that's not true. And probably the most important area where that's not true as it relates to coming to the US is employment law. So the employment laws vary state by state. And in fact, within states, they can vary by county or by city. New York City has special taxes, for example, employment taxes that wouldn't exist if you weren't in New York City. So, and the same is true when I sort of talk to people looking at, US going outbound. And when we think of Europe and the EU, it's like there's Europe. It's that big blob over there, which everybody likes to go for vacations. But it's also all, regulatory. You've got EU, there's an EU overlay, so there's some consistency of law. But I think there are 27 member countries in the EU, and there are 27 bodies of law that you have to deal with. And again, getting very into the nitty-gritty, employment law tends to be one of those areas where there's a high degree of variability. So I think people underestimate the differences. The other thing I think it's important to think about is time zones. Where are people in relation to you? If your headquarters in California, to me, it's 8 hours to London and it's 9 hours to continental Europe. If you're going to be setting up operations overseas, in Europe, as an example, how are you going to think about that? Who's going to be on call when? How do you support people in the different time zones? And one of the things I encourage people to think about, particularly when you're talking about sort of back office and support operations, is think of the world as being divided into vertical segments, not horizontal segments. So I'll tell people, look, if you're going to be on the East Coast and you're hiring a new lawyer, people think, oh, New York or Boston. It's like, yeah, but think all the way down to Miami, or think Chicago is only one time zone off, Chicago and Dallas, right? So if you think about the world in a vertical sense from a time zone standpoint, it gives you a lot more flexibility from a hiring perspective, and you can hire in less expensive areas. You don't always have to hire in New York or Boston. You can hire outside of those places, even along the East Coast. If you're out of those main cities, there are great hiring opportunities.
So real quick, Ken, what I think you're saying is and I mean to cut you off, but I think if we could just, I as a company growing will need to support these. So I'm probably looking at a place where I'm having it. I loved your time zone vertical slice. I'd never thought about it across company. I'd only usually, in my past, I've used it for service and support. Why? They speak English in different countries, that time zone friendly. Do you think people should concentrate resources then? Let's just say if I came to America and I used Ecuador for my call center. Would I want to have lawyers there too, or would I really look at having the best people in the best locations and figure out a fabric to manage that?
So it depends on where you're supporting. So when I think about it from a legal perspective, what I would say, for an in-house legal department supporting a go-to-market team, the go-to-market folks want support and they want it now.
Right.
So that's why
Sign a contract.
my vertical segmentation makes so much difference. So what I want you to do is say, you have a salesperson and then just pick North America, Central America, South America. It doesn't matter. Think of it from the time zone. How are you going to support that person? If you have people in Europe, it's very difficult to tell the Europeans, if you have a legal question, call someone in the US, and worse, if it's call someone in California. We'll get to you in 24 hours, right? So it's just, I think that both internally and externally, it's that time zone, aligning the time zone so that you have quick support internally and externally for the operations that you're setting up.
Got it. Great. That was a really thorough overview at a high level, I think. And you even delved deep into some of the things. Should I rely on a PEO to help me, or these are these companies that allow me to does that protect me, or is it just an assistant and a crutch to allow me to get that first piece done?
I think that the PEOs, which are professional employment organizations, and
Thank you very much.
Yes. The answer is it is one way to go, and I think and the other one is the EOR. You'll hear about EORs, which is an employer of record. So
right.
the bottom line is there's a more complicated issue, but the narrow issue is yes, because you've got to comply with local law. You've got to handle payroll on a timely basis. And payroll, the details there, they are way too complicated for a small company to be taking on internally. So payroll tends to be outsourced. If you're in the US, the PEOs will be providing health insurance and resources that a small company on its own can't really access. So it is a way to quickly get legally and sort of functionally into a market that you're not presently in. And then at some point, you have to look at the costs. They're not cheap. And at some point, you tip, and the scale says, okay, we have enough. We've hit critical mass where some of those resources will be more cost effective to bring some of that in-house. But I think when you're just starting out, rely on those localized resources to make it more efficient. And so you aren't spending your time on, really detailed stuff that has nothing to do with your success in that market.
It doesn't grow. That's an excellent answer and lead me right into my next questions for Dan as it relates to this. So I've been blessed to have grown into international markets and imported and exported thousands of companies working for platforms like Salesforce and Twilio, but they're global by nature. Just like we opened up the internet, made it everywhere. And we had probably elementary information back in the day, Dan. So I'm wondering, when evaluating these new markets, I love that Ken said, I like to say it, don't go out of the house without clothes on. This is like get dressed before you leave, meaning legally be prepared to go outside and know what's ahead of you. How do I then look at these markets? What should I be looking for? And Shivani touched on the partner ecosystem, and we said this go to market. We haven't touched a lot on that. It really can lean into how I choose and where I go, correct? Because I wouldn't be on AWS if they're not in a DMZ that I could sell to the Middle East. Right? I see you smiling. So take us down that path. Is it a pachinko machine and I drop a ball down it, or?
Yeah, what's interesting is that we found companies having two disparate type of approaches. One is a distributed, I wouldn't say spray and pray, but let's say a diversified partner set. And then there are those that within reason to the opportunity, they become a lot more intentional in saying, I am going to target this potential partner. I would opt for the second, or the latter, even if it does inhibit your timing. The reason why is that, especially, let's say, for any AI, company, director, and tangential, anyone relying on an LLM, you have a number to choose from that are very high powered, but they are differentiated, right? At least from an operational and structural standpoint. You need to be very clear as to which one you're going to stick with long term, because once you put that market out and you start changing a fundamental aspect of it, let's say the LLM that it relies on, you're going to get potential customer churn. And that can be the same of, ranging from biotech and who you choose to use and partner with for trials, let's say, or any proof of concept. And that it just ranges. And the also understanding is that you probably can't start at the high end of the market, right? Like there are going to be constraints to certain operational elements to your business from a partnership standpoint, where doing AWS, Anthropic, and name your top tier providers might not be feasible with the capital constraints. And so, like with anything, I think founders have to do a lot, but I think when they're about to embark on a new market, walking through, once you've identified those key areas that my colleagues here on the panel have discussed as to what they need to address, from a partnership standpoint, prioritize those things and make sure that you're accounting for trade-offs and go into it with a very pragmatic view, and also a long-term plan. Business plans, certainly, 1, 5, 10 years, but really thinking for the long term and the inflection points where you might adjust to different partnerships and how you would communicate that to your customers is key.
Good. I love that answer. So now I'm legally okay. I've got my framework. I've done my research. I got my investors bought in. But Ken, real quick, I got a question from Kathy Durfee. She wants to know, can I protect my IP internationally, and how much money and time should I think about that? Will it be enforced, and how much legal support? I expanded her question, but that's what I extrapolated from her ask.
Okay, that's a big question. Can I just jump in on the partnering thing? Just
of course you can.
And then I'll come to the question. So one of the things that I've observed is that going into a new market, it is very appealing to find a reseller that can be your local boots on the ground. And there are tremendous advantages to that. The leverage that you get in terms of the cost of going from zero to something is fantastic. The mistake that I've seen people make, and I've seen it in my own companies at times, is you cannot simply hand it off to the partner. They won't do anything with it. So what you need to be prepared to do is go in to that market and work side by side with your partner and drive the market adoption. Once there's critical mass and there's market adoption, your resellers will be happy to run with it, but they're not going to take you from zero to sort of that critical starting point. So I think it's important to think about how are you going to support partners. Just signing up resellers around the world it's interesting, but it's not a particularly valuable thing to do.
Dan said spray and pray. The other one, you went down the hope strategy. I hope this partner works out. That's not a strategy. So we're learning. I think we should have a list of like George Carlin's dirty words of today.
That's right. So IP, I mean, if you think about it, one of the key areas with IP is just make sure you have the right agreements in place with your inventors and with your producers. So, if you think about copyright law, people sometimes forget that if I pay an independent third party to develop copyrightable work, unless my contract says I own the copyright, then they own the copyright. And you can have disputes down the road. It's like, well, wait a minute, I paid you for that. What do you mean you own the copyright? It's like, that's the way the copyright law works. And so you need to make sure that you are contracting appropriately. And even in your employment related documents, do you have appropriate invention assignment agreements? It goes beyond the scope of both my expertise in this call, but patent strategies you need to think about from a global standpoint. If you're patenting something, a patent is only good in the jurisdiction it's issued. So a US patent limits the ability of someone to make, use, or sell something in the US, but it has no impact on that party's ability to make, use, or sell that thing outside of the US. So patent strategies tend to be you sprinkle it around so that you're strategic about where you do it because patents are expensive. Trademarks are less expensive, and I think it's worth doing trademark registrations in key markets. Look at just like it's important to get your URLs early, that type of thing, so that you don't have somebody who decides that, oh, that looks interesting. Maybe I'll file for a trademark and sort of get in your way and hold you hostage. But it's sort of a long way of saying that IP is very important, and there are global strategies. And I don't want to be here referring you to lawyers all the time, but it is an area where outside counsel can be very helpful to make sure that you have established the right foundation. And I will assure you that IP due diligence will come up in connection with financing. So if you're wondering why you should make the investment up front, if for no other reason, then you'll have a good story when your investors, your prospective investors come in and want to conduct due diligence.
I call this no dirty diapers, clean paper only moments, right? Because you're laughing, but I know you walk into companies, you're like, wait, you don't have NDAs with your employees. Wait, your offer letters in California are wrong because it's different than it is in Virginia. I mean, we could go down this litany of unfortunate gotchas, I'd call them, right? And there are a million of them.
Yes, that's exactly right.
So we're speaking of gotchas, Shivani, let's talk about the gotchas that investors are seeing when they actually have startups expanding into international markets. Do any of them call you and go like, what are they doing? Will they survive? Can we get your help? Should we squelch them? How do they look at that?
Yeah, I think there's a couple ways to take that. So first off, I think if you are expanding internationally and there isn't a good reason for why you're in certain locations, I think that's a hard sell for investors to take. Like if there's not an operational reason that you're there, there's not a good sales strategy, that always brings up questions because inevitably going into any different location is going to cost you money and resources. So anything that you're draining money and resources that aren't going to key objectives of the business, that would cause any investors some concerns. Now, from a more regulatory and tax standpoint, typically investors will make sure that you are actually staying ahead of any filings that you need to do in certain jurisdictions, as well as making sure you're paying taxes in those areas. So all of that creates exposure for investors. So they will typically dig into, well, if you are in ABC country, what are the regulations around it? Have you filed for your taxes? Do you have permanent establishment? are you paying?
But does it affect my D&O policies? Because you're actually at a very tight intersection where they're going to care more about what the company's doing, and they might not find out till 90 days later they sold in Estonia and Bolivia. I'm making some countries up. I have no clue, but Ken can tell us. And Dan's laughing. They're not going to know that to the next board meeting, so they may have a period of exposure if they don't have this controlled and contained. Is that a way of looking at it?
Yeah, I mean, I do think they dig into it during due diligence, and typically in that time frame, you will have some exposure, so you would end up having to address that as well. So definitely things to keep ahead of. The other thing I also think about is sometimes companies try and like set up offshore structures to like maintain IP and get some benefit from like a tax standpoint, which is a good tax strategy. But you also have to think about what it is doing for your business, because I've had some clients where they've set up a structure in ABC country in like Europe, and then they realize that most of their sales are in APAC, and so then you're sitting there wondering why you have a structure that you need to sustain in Europe for an organization that's mostly going to be focused in like the APAC region.
You don't like
So
Cyprus? You don't like
Mhm.
Cyprus as a country for registering companies?
I mean, it could be if you want, but not particularly like that.
I was using that as an example of where I've seen people try to park things because it's a safe place, right?
Right. Yeah, all this stuff takes some energy, right? And then I think the other thing to also think about is, and Ken, you touched on it, employment law in other countries, it can get very complicated. So you could be in situations where you have a pretty substantial, if you do need to like pay severance, a very substantial amount of severance that needs to get paid if you're trying to terminate employees. You could also have situations where you can't actually give stock or equity and you have to give other forms of compensation. And a lot of that stuff, if you're not aware of it or ahead of it, it could once again cause some additional exposure that you would need to be addressing when you are going through diligence.
Wow, there's just so much. My head's actually spinning around this. So when I think about all of that, Ken, do I think about structural ownership as well in the organization? And when I think about that, is there a compliance reason? Because you start saying, does it matter where my founders live?
So I'm not sure what you mean by structural ownership.
Yeah, so when I'm a founder and I'm starting to think I'm going internationally, are there things compliance from structural ownership, whether I'm a veteran? Like, let's say I'm a veteran-owned company, I own 100% of this. That only matters in America. If I'm incorporated in Belize, do they care about that differently? Are there certain things that they should be wary of, or does it not matter?
I guess I would see the other way around as being opportunistic. In other words, it may not make any difference somewhere, but there may be benefits. As you say, veteran-owned business may have some advantages in government contracting in the US, whereas in Belize, they don't care that you're a US veteran-owned business. But it's not bad, it's just neutral.
Right.
And so it's always worth looking at, is there something unique about what you're doing or who you are that gives you some access to whatever resources? It can be capital, it can be, government subsidies for this or that. And so always, look and see what opportunities exist. But I don't think I would be doing it defensively, like, oh, what do I need to be avoiding
Okay.
in that area? I mean,
So,
I have to set aside the politics because sometimes what people say get them in trouble, even though that's neither here nor there. But there are advantages potentially out there. So I guess I see it as sort of advantageous to neutral.
right. Well, you had mentioned taxes, and it was funny. I had to chuckle when you said the New York taxes. We're going to jump over to Shivani, but after, because real taxes, is that the Jacob Javits tax for doing business in New York City that you were referring to? I'm laughing. Every hotel you stay in, you end up getting that $10 charge for their center, regardless of if you attended something there or not. So it seems like some cities can tax you on just about anything. Shivani, when I'm thinking about taxes, and I'm actually thinking about where they're going and managing them, what tax and financial planning across these multiple markets, and should a small company be worried? Like, where's the flag go up? I saw someone say I do business in the US and the UK. Is it the third market, the fourth market, the fifth market?
Well, I think anytime you enter a new market, you do need to have somebody that's at least paying attention to what the requirements are in the location. Because like I said, it would require cost. If you've got headcount in a specific location too, that would require you to start paying taxes directly in those countries, and in a lot of cases result in what they call transfer pricing. So you set up an entity and then you have to pay like some cost plus of like the R&D or the headcount that you've got over there. So I do think you probably need somebody to be looking at those. There are a lot of like local firms, and to be honest, you can even like if you're working with a KPMG, we have people in all countries, so they can help you identify like what are your key risks in the countries you're entering into, so that you can make sure you are doing the filings timely and that you're staying ahead of any of the regulatory requirements. A lot of it does not cost a lot of money early on, and then as you're expanding and getting more complexities in your business in those locations, then you might need to invest more time and money. But my typical suggestion would be if you are entering a market, identify, either talk to your attorney or if you've got an accounting team, a tax team that's working with you to understand what the risks are over there. And then usually you can involve a specialist in that country for a relatively low price to make sure that you're staying ahead of any filings that you have to do. Your biggest risk is that you're not filing and you end up incurring a ton of penalties and interest. And then worst case scenario, in some of these countries, the bar is very low for having to do like statutory audits. And if you don't, then you could expose your management team to the risk of, possibly not being able to enter the country because you haven't been meeting regulatory requirements.
Wow.
So I think just knowing what the risks are and making sure you are at least getting those filings done timely is important.
That's an awesome answer. So that's one side of the coin. If I were to flip the coin, it sounds like financial planning too, because if I hire some folks in these countries where 6 months severance are required, I need to actually every hire, I've got to accrue for that, knowing that that's something I've got to hold on my books, correct?
That's right.
Wow.
And usually when we do work with companies as they're looking to move into locations, I think the number one question we always ask is, okay, why are you trying to move into a specific location? And then what you can also look at is in the surrounding areas, what are the regulations plus the tax implications in those other jurisdictions? And is there a better environment to achieve what it is you're trying to achieve so that you are properly, putting your foots in the right door to get the benefit that you're looking for, and still manage your cost and overall strategy. I think if you're looking at things in a very small manner, so you're looking at 1 to 2 or 3 headcount, that's probably lower risk. But if you are looking to start a full-on office with like a branch and set up a foothold in a country, those are ones that you probably want to spend a little bit more time thinking through before you do enter into those locations.
And when I think about it as a founder, should I think about a percentage or a budget number? Like, how do I, and we're going to talk about that through all of us, like, when I think about international, should I immediately go, because we've run international and entry strategies in our past, but I'm curious, do you have a checklist for people that they should think through?
Yes, I mean, yes, there are certain things that I would think about every time you are looking at a country. I do
Yeah,
think it's
because we created a frame. If we had that
yeah,
framework, you could just almost put a new country name in, and then there'd be some color variations based on tax law, but there almost could be a framework in which you could go, do I have customers? Do I have traction? Can I support them? Can I transact? Can I hire? Like those fundamental things.
yeah. I think if you actually talk to any advisor, they would have a list of things to be aware of and keep ahead of. I will say every country is a little bit different, so different things could matter to different locations, but there are like a general couple of
Right.
things to look at. I think you actually rattled them off pretty well.
Oh, good. So Dan, I'm cranking around right now, and I got 1,000% year month over month growth. I'm a founder. I'm getting pretty antsy right now. How do I look at the global capital markets as they're evolving right in front of us? And with that in mind, do I start thinking, am I going to list one day? Where will I go? How should I start framing that in my own mind as?
Yeah, yeah. I think there's always good to set up some type of baseline expectation of what the market expects. And so if you take an extreme example of, being at a position where you want to go public or at least start the process, it's probably a good idea to understand, at least for software or recurring revenue models, where the bar is currently. And so we're standing at a place where institutional investors crossover in public market would like to see around 500 to 600 million in annual recurring revenue. Just to give a counterpoint, like if you look at Netscope, which was an IPO last week, they had 600 million at the beginning of the year and are slated to have 800 at the end of 26. And so it's not, again, I think that's a good point.
33% growth, pretty good to go out with, right?
Right. And the rule of 40, which is your growth rate plus gross margin, I mean, that's definitely something that's important, but you also need to take it with a grain of salt in the sense of as you get older as a business, naturally that growth rate will decline unless you're going through some sort of inorganic growth or new product rules. And so, an interesting fact is that a lot of investment, or rather, I should say, the majority there's about of software companies or ones that have recurring revenue models. There's about 550-ish companies on Nasdaq. A third of them are growing sub 10%, but they are very large and still receive, an average or above average multiple. About 50% of them are growing a shade under 30%. So it's not a hard, fast rule. Just keep in mind your maturity. And the other component is be very well aware of, what's happening now with the pendulum of profitability versus growth. As you move towards a lower interest rate environment, growth becomes more important. As you go to a higher interest rate environment, but then profitability is king. So the only thing that will need to be taken into consideration that has some gray area around it is the fact that even though we're, for example, right now, we cut interest rates a week or so ago by a quarter point, and yet the 10-year yield has increased. And so it becomes a question of how your investors are modeling things and getting an idea prior to, a pitch meeting to get funding or to go through a term sheet negotiation. It's important to understand in part, how they're going about their models so that you can adjust accordingly. Yeah.
I chuckled when you said the rule of 40. Most of those, having been at Salesforce since the beginning, we had to create those models so that we could tell VCs what they should invest in my app exchange so I could get their money. So we made all of that up. So in a way, I look back and think, couldn't I have chiseled in a different stone so that it wouldn't be so hard fast? Because it's no different than SaaS. The fact that they call them out, I think, is foolishly stupid. It's a delivery mechanism, a model. Yes, it should have characteristics to it, but we brainwashed everybody the wrong way. Similar to what we did to Twilio, and we've made you think differently. It's unfortunate for the founders today because you should not be measured against that, in my opinion. As we go around before we open up the lightning questions for all of this great audience that persevered through our torture here today, if you could give founders do this first, what would it be? And Ken, we'll start with you. I'm preparing an international strategy. What would I do first besides call you and get a retainer?
No, you don't want to call me first. I think that others have said it on this call very well is why are you going internationally? What's the business objective? And I want to just pause. I think it's important to think about things, quite frankly, separated out. Are you talking about offshoring some resource? I want to have my back office in a lower cost jurisdiction, or I want to develop an engineering center of excellence in a lower cost jurisdiction, or am I having a go-to-market conversation? Those are two very different things. So start as a threshold. What are you trying to accomplish going overseas or coming here? It doesn't matter which way you're looking. So what's the sort of primary business driver, and make sure that you have a solid objective that you know that you're pursuing with that. Yes, seek advisors. And I guess my final point is it's going to cost more and take longer than you think. So build the contingencies into whatever it is you come up with for a plan.
I love that. The best laid plans somehow seem to go awry when it comes to international go-to-markets. So yes. Shivani.
Mm-hmm. Ken actually took the one I was going to say, but I might just double click on a little bit further and say, I would also think about when you're thinking about the why, is it a short-term reason or is it a long-term reason? Because I think if you're trying to take on a relationship or some kind of expansion internationally for a situation that might resolve itself in 6 months or so, it may not be worth your time and effort. So I would also think about the timeline if it's something you actually want to build into your long-term strategy for your business as opposed to getting like a short-term win. And then I think looking at your options as well. So if you're trying to move into a specific jurisdiction to, get some lower cost support, are there other options that may be more beneficial to you from either a structure standpoint or regulations or tax laws or even things like cultural fit, right? Different countries, you have to also look at that and see what might make sense. And I think you also mentioned, Ken, like time zones, like that's a huge issue too when you're looking at your options overseas.
Got it. Really great answer. And don't, by the way, you should double down on the fact we're saying the same things because as somewhat experts in our field, we should not have different variations of, is that cancer? No, it's not. Oh, yes, it is, right? Because it really is a diagnosis of a situation. So Dan, how about you?
Yeah, I would probably mention just from, I don't know, the strength of the companies that we've been seeing internationally and the partnerships involved. I mean, what has been helpful is also from a corporate development standpoint and just engaging with, actually, if you can't have that investor serving as that anchor or beachhead, possibly partnerships before moving into the new market has also been helpful, even on a smaller scale. But outside of that, my colleagues, I really don't have much to add. They've pretty much nailed it.
Good deal. So, having done both import and export of truly thousands of companies, when I take a look at it, I like to know the why. Why am I doing this for real? Is there a sucking sound that's happening? Meaning I sold to a US corporation that has offices in 32 countries. Guess what? Follow the snowplow. It's clearing the road for you. You can enter them because you're already going to have to do business in those countries. Pick English speaking ones if you're written in a certain language, because then you can go to the UK, Australia, you can get back. I call it follow the bouncing ball. How do I take my current assets and make them last as long as possible? Then I look at it. Can I succeed? Do I have the money? Do I have the fortitude? Do I have the partnerships, the lay of the land understanding? And to your point, not just paper partnerships for a transaction. And then we spend a tremendous amount of time. Failure will happen because, and Shivani, you said the one I love best, cultural fit. Look, if there's no chemistry, it doesn't matter what you have. Oil and water just don't mix. We know that. So on that note, we're actually going to look for some great questions from our audience. Ken, the one woman Kathy did ask, she was specifically wondering more about offshore operations. Are NDAs enforceable internationally?
I can't opine on that. I'm a California licensed lawyer. However, what I will say is that my experience has been yes, and I have used NDAs, and in fact, use NDAs around the world. And whether or not you can rely on protection, IP protection in a local court, there's always a question about that. But it's important to note, at least from a US perspective, that if you want to maintain trade secret protection for trade secrets, you have to have a trade secret program. And one of the basic elements of a trade secret program is that you don't disclose trade secrets in the absence of a non-disclosure agreement. So whether or not the non-disclosure agreement is ultimately going to be enforceable, not using non-disclosure agreements exposes you to the risk that your trade secrets aren't actually trade secrets. They're not legally enforceable as such. So by all means, use NDAs where appropriate. I have to say, I see people use NDAs all the time for stuff that's like, I don't understand why you need an NDA. It's on your website. You're going to go into a sales call and you're going to discuss things that's publicly available. Did you need an NDA for that? So people get a little bit confused about, where and when to use an NDA. But if you're going to be discussing confidential things and certainly anything that's trade secret, yes, use an NDA.
Outstanding. That's a great answer. And another one for you, Ken. I think they all came for free legal advice today. Prince Vashoni wants to know, he's the founder of Talentio, an AI-powered contract hiring platform. And they've developed proprietary matchmaking algorithms that connect companies to the right talent efficiently. They're planning to register the company in the US, and they'd like to understand whether our algorithm can be patented there. And if so, what would that process be besides get an attorney?
You have to go to a patent attorney. I'm not a patent attorney, so when
That's what I would,
come to
yes.
me, I have, I have a network of people that I would always turn to myself or send people to. But that kind of detailed patentability question, you're going to need a patent attorney.
I figured that as I read it to you, I thought about something I recently asked my friend who's an anesthesiologist about a question I needed to ask my cardiologist, and he asked me if I was crazy. And the answer, and the answer was no. I want a professional of opinion, someone that at least understands the realm I'm talking about. So, yes, that's a great answer, Ken. Let's see if we have any others online, and we're going to jump to some live Q&A, I believe, correct, Michelle, for folks that are here. My company is currently operates in two countries, the US and the UK, founded in the US, but they're struggling to expand within the UK. Wow, what advice do we have? That's probably that question is a very vanilla peanut butter question to answer. What advice will we have to expand in the UK? I would first start with what do you do and what's that ecosystem you live in? And you're doing this yourself, or is there something that actually you mean something to? Meaning, is there a regulatory pool that will bring you into that country? Is there a reason that's again, you heard me, that sucking sound? What's pulling you into those markets that allow you to see that case? Let's see if we have any other questions.
Jump in on that last one.
Of course.
I would encourage you to ask yourself, a very honest question, which is there a market fit? I work with a company that's a UK company that came to the US, and they were very successful in the UK. They had an interesting and niche market. Okay, well, this is great. Let's go to the US. It's a much bigger market. The problem is that the product doesn't fit the US at all. And I mean, had they done better research, perhaps they wouldn't have come to the US, but there was no way that that was really going to get traction here just because of the different industry and business dynamics. So I hate to say it, but be brutally honest with yourself about what you're doing there, and is there in fact an opportunity?
I call it the conviction validation stages. So, Shivani, that's a great answer. Shivani, we have a question for you is, what's an example, in your opinion, of an AI to dental work or services that you're seeing companies in the health and wellness space? They're looking for human capital consulting practice, which I know you have. The question is in the live Q&A section. Dr. Claudia Curious is the one asking the question.
And sorry, what exactly was the question?
What's a great example of services that you're seeing in the AI space for health and wellness inside of companies? So I'm going to presume KPMG has a human capital consulting practice, and you're meeting with companies, and they're asking, can we use AI for health and wellness of our employee base?
Yeah, we definitely do have I would say it's a compensation like benefits team. So I mean, I think the health and wellness space is quite vast at the moment. You've got everything from the ability to use AI to answer questions that would help from like a therapy standpoint, to like setting you up with the right provider, to even on like the benefit side of the house, identifying like what the right fit is for a customer, for like an employee, in relation to all like the benefits a company might be providing their employees. Because I know sometimes that's hard to filter through. So yeah, I would say there's probably a lot of options at the moment. And I'm not sure it's even specific to firms. I think there's just a lot of technology companies out there too that are just providing these options for employers to be considering for their employee base.
Got it. It's a good answer. I think I've seen AI become HR's best friend because they get a lot of the busy paperwork stuff that then actually needs to be coalesced. One of my AI startups, we're actually seeing that sucking sound I referred to coming from the SHRM participants for something we recently did, because they see it's an under-resourced department that needs to serve everybody, and then they need a helping hand always, which it feels like. Now, how it's going to employ to the employees, I think we saw a lot of folks roll out Headspace and different mental health tools. Not that I'm representing anyone because I don't use any of those tools. There's ways in which companies are looking at them. Is that maybe something they should reach out to you? How do we make sure we have a great employee experience? Or is that
Yeah,
not?
we definitely have a team that can assist with that and like think through how you would maybe even combine it with other products to bring to an employer. So definitely, if people are interested in having that discussion, feel free to reach out. I'll put you in touch with the right person.
Got it. And the reason I say that is I'm scrolling through our chat and I see a lot of health and wellness. So it's pretty interesting I think people are realizing the landscape of the market in which we live and operate in today. On that note, Colin, we're going to call you up as we're approaching the witching hour for you to wrap us up and take us away. If I could just get one last statement from everyone here. What is the biggest misconception founders have about going global? And I'll start with they think it's easy. And it's definitely not. As we heard from Ken and the others, it starts foundationally. Are you prepared? Can you support it? This is an area that I would triple check and then triple check again to make sure, because one stumble, fumble, fail, and you could blow through a lot of your money and end up in lawsuits or not have the proper things done. So make it a calculated bet.
I guess I'll jump in. I would say before moving into any new geography, send, for lack of a better term, an expeditionary force, and make sure that those people don't focus on the product, don't focus on the business model, focus on the relationships. Develop a network that will support the business when you need guidance, or when you need capital, when you need partnership. It's a lot easier to do now more than ever. Moving in that direction first, before putting anything down on paper, will definitely help the business.
Maybe I'll go next. I would probably say success doesn't transfer. So if you're super successful in one jurisdiction, you can expect it would be the same. And I think you can definitely mitigate some of those risks with what Dan said to make sure you actually understand the local market you're moving into. You have the right contacts there to see if what you're trying to do would actually fit.
Good answer.
I'm gonna
Bring
switch
us
to
home.
a completely different direction, which is culture doesn't migrate by osmosis.
Oh, I love that.
And so it is so important for you to think about what is your company culture and how will you ensure that your colleagues in remote locations will understand and be part of that culture. And that takes a huge amount of dedication and energy and resource outside of all of the legal and all the other nuts and bolts things we've been talking about. And culture is so incredibly important to company success in the long term.
That's a really great answer. Gosh, there's so many things. It's like juggling a bowling ball, a pin of fire, and a chainsaw. But if you've got the talent and you've got the practice, you can actually pull it off. And I think that, Colin, you've pulled together a great group today for folks to sort of scratch the surface on where to go. And I'm looking forward to how we can be a resource moving forward for everyone that participated today.
Amazing, Bobby. Well, thank you for leading such an amazing discussion. Shivani, Ken, Dan, thanks for sharing so much of your expertise. As Bobby mentioned, we did just scratch the surface, but covered a lot of ground during this boot camp today. So on behalf of everyone in attendance, everyone at the team at the Nasdaq Entrepreneurial Center, thank you so much for joining us, sharing your time and, of course, expertise today. For those of you who are still on, we got a bunch of great upcoming webinars, so you can view them in the link in the chat and the follow-up that we have. But we really appreciate you all joining us today, and we look forward to welcome you all back online soon. Thanks again, everyone. Have a good day, and appreciate it all.